Hi everyone. Let's do another little quick trading section today. It's the 11th of July, Tuesday. I already pre-populated this Greeks and ratios here just so we can go through this quickly. But basically, and before I go there, just want to show you, I think I mentioned the last time about the bill, the ETF here, 400 shares of ETF that holds the T-bills. They pay the dividend, and then so that's now in the $149 they paid that yesterday. So this is the let me just show you again. This is the one here. We said that at the end of the month they dropped down, they paid a dividend and they dropped down, but the dividend is paid about a week later or so. So it first shows as a little bit of a loss, and then it comes back to the account. So that was yesterday, so we're all good there. Let's go back here and let's just double check here. Everything is green, which means we should be putting on another trade. Delta is in line, buying power usage is in line, theta is in line, and also the number of trades and trades per week. Everything is in line, everything is green, so we can just go ahead and put another trade. And to do that, let's go to MES again. 66 days is not gonna have, no, it's too little. So let's go to 80. And in the 80, the 9 delta here, however, we already have two shorts here. Can do another one. We don't want to go down to 8 because it's only paying 18 and change. So we can go here. It's going to get a little bit trickier for tracking purposes. We're going to have to monitor it separately on the spreadsheet just to make sure which one is decaying and which one is ready to be harvested. But we can do it. Nothing is going to change here. So let's go ahead and do 2 of these. And let's just quickly try and go a little bit higher. No. And let's walk it back down. Let's see. All right, and we're filled at 1950. So now we go back here, and that was 80. The closest one we have to 45 would be 51. We said we're going to lean towards towards 50 if the naked puts are at 75, 80 or higher, and that gives us a 29 days difference. If we take a look here, for the 29, we would be right here. So we want to spend 25% of the collected premium. We don't really need calculator for this, but just for presentation purposes here. So if you have 19.5 times 2, that's 39, and then times 0.25, it's going to be right. So we want to spend just under $10 for the PDS. So let's just double check what was the strike here. That was 39.50. So we usually want to start at about 100 points higher, 39.50. So for the 4,050, just to start, and then we'll work our way around that. So 37.50 would be. All right. So you can quickly see here if you are at 300. So this combined should be at 1,500. That means it's a 300 wide, but it's only $9. So we can go a little bit higher. All right, we're still here. And then let's try and buy this, but if it doesn't work, we'll just up it up for a quarter, be right there. And then this is probably going to get filled, hopefully. These MES don't have the greatest fill. You see, we're offering more than the mid price, and it's still not going. But we'll hang on for a minute. Oh, great! Spoke too soon. Filled. So that's our trade. We have the put debit spread at 40.70 and 37.70, and I will go ahead and fill up this sheet right here with the new trade. And then we also, I can show you here what I do also with the calls in preparation for the eventual call spreads. This was, let's just double check, the expiration was August 31st, right? So what we do, we take August 20, well, what did I say? Was it 21st or 31st? August 31st, okay. 31, 8. And we collected, what is it, 190. And the reason for this is because this trade is not going to be on past the 31st of August, because that's when the put debit spread expires. And here we're collecting data as to how much our minimum profit will be should the market stay go higher or stay around the same area. It can be lower than this unless the market goes down. So if the market goes up or stays where it is, we know that we'll be collecting. This is not the date, I'm sorry. This is credit per position. And then we know what we can see here, that this is what we're collecting. That's $400 for sure. So we can spare a portion of that and put it on a core credit spread. But I'll do a video just about that. But right now, this is it. And we did a quick trade. Thank you very much for watching. See you next time.